Hey guys, welcome to the vlog. So this is a quick business-oriented crypto investing vlog. First of all, as I said many months ago, when Bitcoin, all the other cryptocurrencies were at their height, I said that it was a speculative mania, and I warned people that it was largely a psychological event, the whole ascent of cryptocurrencies. It was not based on fundamentals. It was based on FOMO, fear of missing out. One of the things I identified back in a video 6-7 months ago when cryptos were at their all-time highs is that the action that I was observing, that we were seeing in the crypto market, that parabolic rise, that where everybody's going crazy, it's all over the news, it's in the media. I said it mirrored exactly what I saw in the housing market during the early 2000s in the US, what I saw in the gold and silver market, that's a better analogy. And I warned people that this was going to fall and on top of itself. I said it was going to collapse because I didn't know when it was going to collapse, because it's impossible to predict the end of a bubble. It's very difficult to predict it anyway. You're lucky if you predict it accurately. But I saw the same action, and now that it's collapsed, we're seeing over the last 6 months the exact same thing that happened in the precious metals markets, gold, silver, etc., where you're going to see lower lows and lower highs, step lower, steps lower, steps lower. Now, first of all, if you're a big cryptocurrency believer, if you have an emotional position, if you feel emotional about cryptocurrencies, that should warn you that your perception of reality is being altered by your emotions. One thing I learned when I was a boxer, and martial arts as well, was that you go into a fight without emotion. You have to be as stoic, as cold, C-O-L-D, as cold as you can be, so that you can minimize the cloudiness of your judgment. You don't want to be affected by your emotions when you're going into combat. You want to be totally cold so that you can see everything and be much more aware and be able to react properly. When you're going into a stock market, a cryptocurrency market, a commodities market, when you're investing, you have to, as hard as it is, you have to try as much as possible to be as stoic, as cold as you can be. No emotion. No emotion. So if you're feeling emotional about cryptocurrency investing, just know that that means that your perception to reality is being altered. There's no debate. It's just basic science. Check out behavioral psychology. It has a huge impact, literally, what you feel emotionally about something. So first point. Now, second point is that the reasoning that cryptocurrencies aficionados have for the reason why they believe cryptocurrencies should be going up in value is the exact same reasoning, not similar reasoning, the exact same reasoning that the gold and silver, the precious metals people had 10 years ago vis-a-vis the precious metals. What does that mean? That means that in the old days, in the precious metals bubble, when it happened, look at the price chart of gold and silver and look how it's almost identical to cryptocurrencies. That should clue you into something. And the reasoning that the precious metals people gave for the rise of gold and silver were that fiat currency could not be trusted because it could be manipulated by government. And so if you wanted sound and safe money, you had to buy gold and silver. Now, the gold and silver people had blinders on where they ignored the fact that gold and silver prices were far more volatile than just about any of the major fiat currencies, if not all of them. So you looked at the price action of silver in a given week, a given month, it would take years for you to see that kind of fluctuation in value of the US dollar, the British pound, the euro, the Canadian dollar, Japanese yen, etc., 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 etc. It's very rare that you would see that kind of volatility in the price action of a fiat currency from a major nation that you saw weekly in the silver market, if not daily. Cryptocurrencies and their fluctuation in terms of value makes gold and silver look like nothing. It's like on steroids. So these cryptocurrency pumpers will tell you, no, it's fiat. It's not, the value is not controlled. It's not. It's too volatile. Meanwhile, cryptocurrencies are far more volatile. Far more volatile. Another thing they would say about fiat currency is they would give you the reasoning, just like gold and silver guys would say. Gold and silver has value based on a real market where people use gold and silver in actual production. They make jewelry with it. And whereas fiat currency wasn't backed by anything, they would say. They say it used to be backed by gold, but since I think Nixon took the U.S. dollar off the gold standard and set the stage for the world's fiat currencies. And so they argue, well, fiat currencies are not backed by anything, but gold and silver is backed by the intrinsic value of gold and silver. People use it in the market. Sounds familiar, right? The cryptocurrency people made the same claims, except fiat currency, cryptocurrency rather, is not used in anything, hardly at all. There's nothing you can do with cryptocurrency you can't do much better with the current credit system and fiat currency-based systems these days. And again, the elephant in the room with regards to cryptocurrencies is that cryptocurrencies is backed by, they would argue, by this community of investors in cryptocurrencies. Investors, I call them gamblers, really. Whereas they would say fiat is backed by nothing. This is false. Fiat is backed by the governments of these major nations. The U.S. backs their currency with their military, with all the assets of the U.S., the country, the United States of America, the tax base that they tax all these hundreds of millions of people, and just all the physical assets. The U.S. has tremendous assets in the ground, which the government can lean against to back their currency. Same thing with all the major countries. So to say that fiat currencies are not backed by anything is silly. It's backed by the people of that particular country. So, yeah, cryptocurrency, they might have 1 million investors, maybe 4 and 5 million investors around the world. Who knows? Well, the U.S. dollar is backed by 350 million people. I think it's 350 million U.S. It's also backed by all the assets owned by the federal government in the U.S., including the people which they can tax at whatever rate they decide to. Again, the same story that the precious metal people were talking about 10 years ago, you're seeing the same story in terms of how they're trying to assign value to cryptocurrency. Whenever you see an asset being pumped in the marketplace, I mean, it's all on TVs and newspapers, and then my friend's a 17-year-old kid is buying Bitcoin, now you know it's a bubble. It's a sure sign of a bubble. The most famous story, well, back in the day, one of the most famous stories with regards to that was Joseph Kennedy, the father of John F. Kennedy. And he famously sold all his stocks just before the big crash in just before the Great Depression. And he sold his stocks because he said that he was getting his shoes shined. And then the shoe shine boy said, hey, started talking to him about stocks. And Joseph Kennedy wisely knew that if the shoe shine boy is talking about stocks, it's time to get out of the stock market, right? Now, why do I believe that cryptocurrencies are not going to go back up? The number one reason is because any market really is a big part of it is emotional. There has to be an emotional confidence in the asset for it to go up. Now, what has happened when everybody jumped into the cryptocurrency phase in just this past winter, and a lot of people bought near the top. A lot of people bought Bitcoin when it was 16, 17, 20, 18, 19,000 a coin. That's when a lot of the people buy. I haven't looked at the charts, but I suspect the vast majority of buyers of crypto bought them when it was near the top. Maybe, if we'll just look at Bitcoin as an example. Maybe when Bitcoin was 14, 15,000, that's when I think from that point onward is when most people bought into the crypto market. That's why it shot right up like that. Now, all these people have been totally destroyed, burnt, right? They've lost 2/3 of the value of they put in $10,000, it's now worth $3,000. They've been burnt. And one thing I know about any market, once somebody has been burnt in terms of being in a particular stock or a particular commodity or a particular asset class, cryptocurrencies are an asset class, they will never go back into that market again. So that's why I don't believe you're ever going to see those highs, the 20,000 in Bitcoin, at least for the next 5-10 years, if ever. I largely believe that the tokens that are floating around out there are not really worth anything. I think the value of the blockchain is the underlying blockchain technology, not the coins, not the tokens, because there's nothing unique about them, because anybody, any Tom, Dick, and Harry, and Jane can create their own cryptocurrency and sell you a story why it's better. Or perhaps they'll perfect, let's say they perfect ETH, they perfect Ether. Somebody will just generate their own version of it, right? It's open source. They don't need to pay you $400 a coin or $1,000 a token. They don't need to, because they'll just do their own and set their own price. That's how reality works. So when you're out there on the YouTubes, on the web, and listening to these people, remember all the people who told you to keep buying when the cryptos were near their all-time highs. Remember who those people were. Remember who those people were. And remember, like the founder of Litecoin, he sold all his Litecoin near the top. He gave you a reason, like, well, I don't want to be influenced by the market. But it was very interesting that he sold all his Litecoin at the top. So he's sitting pretty good right now. Yeah, he's sitting pretty good. So I would remember all the people who told you to buy when it was near the top. And maybe you want to take whatever they tell you in any other area going forward. Maybe you want to take what advice they give you with just a little bit of grain of salt, put it mildly. So there you go. When is a good time to invest in cryptocurrency? When nobody has heard of it. 7-8 years ago, whatever it was, when I first heard of Bitcoin, when it was 4 or 5 cents, I myself and a friend of mine, we were trying to buy them. They were 4 or 5 cents. We were just going to put $1,000 and buy the Bitcoin. But it was so difficult, but we forgot. We said, 3/4 through the process, we forgot about it. Mistake, because at one point, those Bitcoins were worth at height. They were like 200 million. Now, let me give you a last little tip about investing. It's nearly impossible that somebody will buy a Bitcoin at 4 or 5 cents and then hold them to 19,000 a coin or 18,000 a coin or 10,000 a coin or 5,000 a coin. It isn't going to happen. It's like, if it happens, it's a super rare event. Most people are just going to sell when they make 5 times their money or 10 times their money. Like, let alone, going 4 or 5 cents a coin to going to, 19,000 a coin. It's not, that's an illusion. That's an illusion. So when you're looking for some crazy investment opportunities, you have to look for things that people are not talking about. You have to look for things that you don't hear about on the web, you don't hear about, it's not on Bloomberg, it's not written about in newspapers, because when it's there, you're near the top of the market, because markets are driven by participation, how many people are involved. So it's in all the newspapers, on TV, it's on Bloomberg, you got a lot of people in it already. You want to get in before nobody has heard about it. Then you sell as it's shooting up, you sell into the rise. And that's, by the way, what a lot of big whale investors in cryptos did. After the fact, they said, yeah, we sold most of our coins. When everybody was buying in, the big early whale investors, they were selling into the spike because they know the action of all markets. It's the same. So study that. If you want to understand how markets work, look at the action of cryptocurrencies. Look at the charts and the action of precious metals 10 years ago. Look at the action of housing over the last 20 years. Look at the action of housing in Japan in the early 2000s. And you're going to see, look at the Nasdaq as it shot up in the 90s, same type of thing. Look at that and educate yourself, and you're going to see very similar patterns. And this could give you a great opportunity going forward in terms of investments. You might be able to identify some things before the rest of the market does. Anyway, a little off topic, but I'm here to mentor people, not just in code, but not just in freelancing, not just in being an entrepreneur, but also just general investing. I'm lending you my experience, since I've been, I think I'm older than many of you out there. So that's it.